Hey everybody, it's Ed Zoller with Villa Realty Group with your end of January 2025 real estate market update. For those of you who do not know me, I've been a real estate agent for going on my 25th year now, full time down here in Cape Coral, Fort Myers, and I'm here to do the graphs, pull up the data, and give you my opinion when someone says, "Hey, how's the market? What's going on?" My opinions are based on data and facts, so I'm here to share everything with you. Hope you guys follow along pretty good. So I always start every market update out with inventory. And I tracked inventory all the way back to 2016. Our long-term average of inventory for things for sale in Lee County is around 6,500. And as you can see here, we also have three very distinct graphs and arrows that show that we do hit a low come October time of inventory where there's not a lot of homes for sale. We build that inventory up until January, and then January goes all the way back down. It's very methodical, very predictable. And actually, matter of fact, September is the bottom of this arrow. It tends to be the same distance. All I do is copy this arrow 4 times over to show you how much inventory we gain, around 3,000 homes during that time. Then our season hits and the inventory goes back down again. Obviously, when COVID happened, that all threw that out of whack. Remember, COVID, we lost in the country like 5.5 million homes just disappeared. Makes sense because people were afraid of COVID, didn't want their homes being showed, and they took themselves off, which made our inventory very low. When you have low inventory, prices soar. And since 2022, July, now our inventory, there's no more steps, there's no more ups and downs. It's just up. We had a little bit of a showing here. And now, starting in September and going up, look how steep this graph is. We haven't just gained 3,000. We've gained 4,000 to 5,000 homes more than we bottomed out here around 9 grand, 4 grand, going up to 13,000. So our current inventory, guys, 13,126 homes as of when I wrote this, end of the month, and that's up 13%. That's since last month was 11,000. We went up 13% of inventory. Our inventory is 55% higher than last year. That's a lot of homes, guys. And when you have a lot of homes and inventory goes up, we tend to have price reductions and more competition, and sellers do not have much power. Of the 13,000 homes, 2,300 are existing inventory. 20% of that inventory is new construction. And we're going to talk a little bit about that. But guys, a lot of inventory. That's the first point of it. I came up with a new graph. So this is a new graph. I did median days on market all the way since 2016 for Lee County. And I want to see like a little trend here. And this is really what graphing out and doing this data does. It gives you a little bit of a trend. I highlighted in red January. And as you can see here in January, our average days go down. Why do days go down? Because the market's a lot hotter. You can even see here from when our inventory starts going down and up, it starts off as a high days on market and it starts going down January, February, March, and then it bottoms out. And then when you see median days on market, DOM is what we call it, go up, that means the market's slowing up. And as you can see here, after Easter, it slows up all the way into the summer, and then it speeds up again. But I want you to look at the pattern here. 73 days down to 66, 67 down to 62. This was the only year that it didn't go down. 75 to 67, 62, and then this is COVID. So again, throw the rules out. But then it went back to normal. Peaked out here on our way down from January, a couple months, all the way back up again. Went in January here down. I just want you to see this. We peaked out here. This should have continued to go down, but we had a very drastic increase up of days on the market. It's not surprising. There's 13,000 homes for sale. But I just thought this was interesting when you look at median days. And I don't quite frankly like the median days on market because who cares about the middle guy? If you have 100 homes, the 50th home, that matters. I like to look at averages, but this is the highest January days on market for median days in the last 10 years. And I thought that was interesting. That might tell you a little bit about the market there. The reason I did that graph is because Realtor.com in January came out with this article. I have the highlight right here, and it ranked the top 4 cities where the days on the market are over 90 days. In essence, the slowest markets in Florida. And they put in New Smyrna Beach, Palm Coast, Panama City, and Gainesville. What I don't like, the reason I use median days, I did like 2 things about this article, and you got to look at the source of who's writing this. New Smyrna Beach, have you ever heard of it? I haven't. I had to look it up. It's part of Daytona. That's like saying that Captiva is its own thing. or that little area of Babcock. We're going to call that a different thing and look at just the median days there. Why did they single out a little teeny area, but everything else they talked about Panama City or Palm Coast or Gainesville? There's a lot of little mini cities in Gainesville. So why do all of Gainesville, but don't do this little New Smyrna Beach? And I think I know why. Anyway, let's continue on with the top 10. Deltona, Daytona. Yeah, well, New Smyrna Beach is the worst city. It's not really a city, it's a little town, but it's because it's part of this 89 days on market. Look at this, Cape Coral, Fort Myers, right there in the top 10, number 8 with 84 days on market, Punta Gorda 86, Lakeland and Port St. Lucie. You have to look at the source, Realtor.com. They're telling sellers out there, hey guys, it takes 2.5 months to sell a home. Hey, 45 of those days is probably being under contract. So it really only takes a month and a half. Be positive about this market. List with a realtor, because Realtor.com loves realtors, and everything else. What they're not telling you is that, yeah, our median days on market is 84, but our average days on market is 131. That's a whole different saying when you're saying over 4 months to sell a home. And we're not even number 1. We're number 8. So I wonder what New Smyrna Beach's average days on market is. This is a little more real. This is more important data to tell a seller that, hey, listen, things don't sell in 30 days anymore. They're taking 4 months or longer. And so that's why when I read articles, you got to see who the source is and how they want to spin things. I like to look further, deeper into things, just look at the truth and matter of it. So I thought that was interesting. Our demand. Sales went down 15%. That's a lot to go down in 1 month. And if you've noticed on this graph since 2020, but going all the way back, that we have just hit a new low in 40 years. I've been talking about this every single month in 2024. Hey, we're the number. It's the second worst sales. It's the third worst sales in 40 years. January of 2024, that was the worst in 40 years. And then here, January, we're beating that. 729 homes. Look at our average, 1,700 homes are our average sales, and we sold 729. That is next to nothing. There were quite a few of those $1 million homes out there. Again, 20% of our inventory is new construction, but I thought it was interesting. Of the 729, 30% of our sales are new construction, and it's the incentives that do that. In this PowerPoint, I am going to go over why new construction is cheaper and significantly cheaper than some of the used market, which is going to create downward pressure. We're going to go over a little bit of that after this, but I thought that was very interesting. Also, look at the downward trend here. And no, this is not a stock market graph. Every peak, you got a lower high, lower high, lower high, lower high. Here's the lows, lower, lower, low, lower, low, lower, low, lower, low. This was a company, you would say, I'm not investing in that company. And if in real estate, I guess it's different, but in my opinion, it's not. Our demand is going down, and it's going down pretty fast. Our median home price, this has been that stubborn mule I've been talking about. It finally went down a good chunk, 6.17% compared to the median home price of last month. We are finally broken that $380,000, $390,000, $400,000 range, and we're finally starting to go down. And don't look at the jaggedness of this. This is ever since, I would say, 2023, 2024, this is somewhat, other than this little peak here, this is a kind of a downward trend. There were quite a few. There was another $5 million home. When you have the lowest sales, you do not have a big sample, 700 homes. One of those sold for $5 million. I counted 40 of them that sold for $1 million plus. And there's a reason for that. I looked into it. So why is it still high? We have very few sales, but of those sales, we have a lot of $1 million so that keeps the median home price. Again, remember that middle part of it. And the reason I use median and not average is just because I've been doing this for 20-something years, the median. And so why break the mold and go back 30, 40 years and try to look up average prices of every single month that's ever happened? I'm just going to keep consistent with this graph. And so it can look at that trend. That's really what the graphs are. The $1 million home sales have increased 30% in 2024. The average age of the home buyer went up a decade since prior to COVID. I want you to pay attention to that. Like 44 was our average age of person. That's a lot of single family. That's a lot of younger people. That's single people. That's 20, 30, 40-year-olds as the average. And now it's 56. Well, 56-year-olds, tend to have more money than 20 and 30-year-olds. I just thought that was interesting that the average home buyer has gone up a decade, and and $1 million home sales have also gone up, and that's going to kind of skew numbers a little bit. I'm more catering towards kind of like the everyday Joe, the people that make maybe 70 to 100 grand household that are trying to buy a home, and so the interest rate, millionaires don't care about interest rates. They're paying cash, buying $1 million homes. But it's the everyday person where interest rates are really affecting us. But good news, median home price went down. So is this sustainable now? Every month I go through this graph. It did go down, but this is what this graph is for those who haven't watched my videos month by month. I look at the average household income. I look at the long-term average of what percentage of that income should go towards a mortgage. So to me, you're either below or above this line. If the market's sustainable, as you can see here, when we're below the line, people only have to spend anywhere from 16 to 24% of their gross income on a mortgage. And they did it from 2009 all the way to 2022. But there are brief periods of time in that 20-year cycle that people are paying 46, 48, 40, 50% of their gross income. That's not affordable when half your gross income, not even what you bring home, your gross income goes towards a mortgage. So we finally got out of the 40s that we hit here due to COVID. And look what happened to COVID here. And it's going down, but when is it going to be sustainable? When this kind of comes back down to this number, and that's a long way to go for that. So if someone asks me how long do you think it's going to take, it's going to take the time it takes for a monthly payment. That's right now people can afford $1,581 a month, which is a little higher than it was last month. But right now we're at $2,300. So we got a ways to go. Remember, mortgage payment isn't just price, it's interest rate, taxes, and insurance as well. So interesting graph I've been tracking month by month to kind of let people know I don't think we're a sustainable market based on this data. And are we stabilized? Everyone's waiting for that stabilization. Oh, wait for the election. The market's going to stabilize. I'm going to wait for this, and I'm going to wait for interest rates to go down. And wait. If you want to wait for one target and one target only, you're going to want to wait until the market stabilizes. This is the Zillow Home Value Index. And what I look at is negative home growth or positive home growth. Yes, sometimes Zillow's numbers aren't 100% accurate, but you graph it over time, all the way since 2000, it starts making sense. Stabilized is this zero line. Stabilized is being within maybe 0.6% of that line, either up or down. I would even say we stabilized right here in 2010. But the true stabilization of the market was 59 consecutive months it took. The last crash, the last bubble we had where we went way too high too fast. This is tracking percentage increase per month, month over month. So imagine if your house went up 2% a month. That's 24, 30% a year. But right now, as you see here, we're at our 18th consecutive month. And I remember doing the PowerPoint 18 months ago and said, hey, this is our first consecutive month. Hopefully it doesn't take 59 months to do this. Well, we're at 18 consecutive months, and it's getting further away. So interesting that I do not think we're stable. I think we're getting further from that line. The closer to this line we are, the more I can probably say data says we're stable. I did do a list of the top metro areas that are losing the most year over year. So there's median days on market. Realtor came out with that. I think it's more important of the cities in Florida, but I didn't even want to do Florida. This looks like I did Florida, but look, I got Louisiana, Texas, and some parts of California, which is really northern part of California. I did the whole country, metros in the country, who's losing the most year over year. And look who's number one, Punta Gorda, Florida, negative 7.5%. Cape Coral, negative 5%. We're number two. Then Northport, number three. Then Louisiana. Then Naples, then Panama City, then Austin, then Houma, Louisiana, Eureka, California, which is really far north, and in California, and Crestview, Florida. You would have thought I did a top 10 in Florida by looking at this price. A couple things I did with this. I just ranked out a couple things here, how much price cuts are going on. I did do populations over 100,000 because there's way too many small little cities that's hard to get data for. But I did metro areas above 100,000 population. That's a good sampling. But look at the overvaluedness of it. Like right now, Lake Charles, Louisiana is dropping in value, but they're actually undervalued right now, as well as Houma, Louisiana. They've already been crashing for a year and a half, almost 2 years now. So they've kind of overcorrected. And this is what happens. You go down, 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 and then all of a sudden you're no longer overvalued. You actually are undervalued. And until it corrects and stabilizes and starts its way back up again, back to zero, this is what you're going to see here. We are not in the negatives as well as Punta Gorda, Northport, but 19.5% overvalued. And I remember I talked about the homes that people are buying now. There is a way of getting 19% off that price. Remember, asking price mean nothing about market value without actually, having a seller cough up $80,000. So let's go. I thought this was interesting as far as ranking the top 10 metros in the country. Of course, when I first looked at it, I thought I just did Florida, but no, I did the whole country. Anyway, moving on. Home value growth in Florida. This is from Zillow and FHFA. It goes all the way back to 1975. And the thing that stands out here, you look at the long-term average of 5.4% for home value growth. Not just Florida, not just Southwest Florida. This is the country since 1975. And there are moments where it peaks very, very hard above that. And we can tell in 06, we know that happened. We had a bubble and it went very high, home value growth. But what did it do after that? Equal and opposite reaction. It went from here to here. Then it went to here to here, here to here, and here to here. Almost like a 3 times adjustment until it popped very quickly back to center and then kind of hovered around that center. Like it hovered just below that center here. It hovered above this center here. And then right before COVID, boom again. What do you think? If you just had to guess, it went from here to here, here to here, and then maybe here to here. I'm just moving a cursor on a graph, but makes sense to me. If it happened once before, history does repeat itself. But and you guys can read along. I pretend that no one's watching my videos, but there's a couple of food for thought on this one. And people are like, wow, the average home growth really went down. What's the reason? It couples with, and this will probably be a graph for next month, when this happens, you get a large decrease of people moving out of Florida. And so I looked at migration levels, and we are at right now a migration level we haven't seen since 2011. We have always gained anywhere from 100, and obviously during COVID peak, we were gaining 300,000 people a year, and we just gained 60,000 in 2024. It's on its way back down. It almost follows this graph perfectly. It did back here. It even did it a little bit here. This huge growth, huge migration growth in Florida from 1998 to 2005. Huge negative growth going back down to here. And now we went from 300,000 to 60,000 population. So I probably should have superimposed the population graph with this one, and I might do that next month. But I thought that was interesting. So let's compare month to month, guys. Housing rooms for sale from 11,000 to 13,000, up 13%. Homes sold down 15% from the second worst month in 40 years to making it the number 1 worst month in 40 years. Our pendings did tick up. Now, I just want you to pay attention to something. 1,000 pendings turned into 700 sales. So 1,300 pendings. I don't think we're going to break another record. We're probably going to be in the 800-900s range, but this is supposed to be seasoned. This is supposed to be when we had the busiest of the entire year. And it's so far started off very, very slow. Our new constructions, all these builder incentives, and we gained 200 homes, 25, 28. That went up 8%. Average time on market went up significantly, 7%. Our median asking price finally went down. It wasn't the stubborn mule I talked about, down 4%. And the selling price also adjusted as such, down 6%. And our average asking price to sold price went up a little bit. Sellers are getting the memo, guys. When I go to a house now, no one's thinking it's 2023 anymore. They're realistic to knowing that the market is not what it was then. That was the time it was the highest, but moving on. So buyers or sellers market. I've been frustrated. If you've never seen any of these videos, then I've been struggling after extreme buyer's market and having 10, 12 months of inventory. I have struggled to name the categories. We have been sitting here for a bit, but with 700 sales and 13,000, we just hit right on the nose, 18 months. So red fire sale buyer's market and the Black Friday buy one home, get 2 free. I don't know, got 18 months inventory. If no one else went on, we'd have 18 months it would take us at 700 homes a month selling. Obviously, our sales are going to go up and it's going to adjust this, but 18 months, I'd have increased the graph and I'm running out of things to say. So just put it this way, you have control. You have lots of control. Buyers can ask whatever they want. And it's almost like sellers are stupid to not say no if they really want to sell their home. But I digress. Anyway, that's I thought that was interesting, and I really don't want to find out what I name this one. I just give up. I don't even know what to call it. Dumb. But all right, let's talk about that home analysis and how you can get a seller to cut 19% and make that house already crash that overvaluedness. And how you do that is with monthly payment. Most buyers, especially first-time home buyers, they don't. The price doesn't matter as much as it is what's the monthly payment. And I'm not talking about adjustable rates or negative AMs or messing with it. I'm talking 30-year fix. What's my monthly payment? So I took this house. This is a house that actually one of my buyers offered. And because we have control, this is what we did. We had a house here at 343,670. I think that's 19% too high. That's about $60,000 on that. So this is what we did. If this was any other home and not getting any incentives, you would end up putting down 3.5% if you're a first-time home buyer, FHA loan. I did the interest rate of that. The closing cost would be $8,500. Your down payment total out of pocket would be $20,500. Your insurance about $1,600. Interest rate of FHA is when I wrote this 6.625. Taxes at $39.40. Non-homesteaded. We'll talk about that maybe in the next PowerPoint. A total payment $2,816. Not affordable. Remember, $1,500, $1,600 is the average person. Is this the average home? No, it's a 4-bedroom, 1,800 square foot with city water, sewer, and Cape Coral. Of course, not the average home. So it should be more, but it shouldn't be twice as much as what people can afford. But what we did was this. We went to the builder. They wanted this price. We said, listen, I want a monthly payment fixed for 30 years. So what they gave us was $30,000 of flex cash. I'll explain what that is. A 5.5% interest rate promo. You know how much it costs to go from 6.625 down to 5.5? About 2.5 basis points. What that means is 2.5% of the loan. 2.5% of this loan, that's in the tens of thousands, like over $10,000 worth of that. And so now we're up to $45,000 worth of incentives. Same price, down payment. They pay all our closing costs. There's another $17,000 on top of that. Total down payment $12,000. So you're saving $8,500 from what you would have to if this was any other house. The insurance, because it's new and not used, it's $900. Just got a quote for it. And we were able to use some of this flex cash to buy down the rate. Take this price down to $333 because whatever left over, we took off the price and made that total payment with everything all said and done, $2,351, saving them $465 a month. I did the back math on this. How can I get this down $465? I have to drop the price 19%. That's how you get. When you're in control, what you can offer. Were they offering 30-something thousand plus? No, they weren't. We had to ask for it. We had to ask for money off the house. We had to ask for all that stuff. I said, if you can't get this done, then we will wait. They're growing in their inventory. They did not decline it. I'm not saying that every single time in every single house is going to be like this, but if it's a completed house, this house isn't even complete. It still needs to be built. So think of that. This thing's only halfway done. This isn't even a CO'd house. Imagine how incentivized they are if the house is already done. Something to consider. And not every builder and not every kind of thing. But anyway, I'm making this video long, I know. But let me just overview these data points. Builder inventory is at an all-time high. Inventory went up 13%. Demand dropped 15%. Pending sales went up 29%, but level-wise, still very low. But it makes me think that we're not going to hit another 40-year low. So we will have more than 700 sales. Woo! Hopefully a lot more than that. Home value growth is still under the stabilization, 18 consecutive months. Population growth went to a level we haven't seen since 2011. And builders own a majority of the homes for sale, and record numbers in our area ever since 2006. They broke that record last month. And now that they even gained more homes, that record got not shattered, but increased again. My data points, I graph every one of these graphs comes from every one of these. People have asked me, how do you source things? This is exactly what it was, other than not the Michigan credit thing anymore because I didn't do the consumer confidence index, but I did pull something from Realtor.com. I do look at the news, and when I read them, I just kind of, I want to, if I call it like I see it, if it's kind of like a half truths, I'm going to try to make truths out of it. So you guys, and if you guys have any articles that you've seen, feel free to bring them my way. You guys, thank you so much for all your comments. I've gotten a lot of you guys commenting on me. I've actually, some of you have reached out to me, asked me questions about things. And so my phone is always available. I'm giving you my cell phone right here, my email if you want to email me questions. You want me to look up other areas. I'm here for you guys. Thank you so much. I'll talk to you later.